Ever wondered how companies record their transactions using the double entry system? If so, you're in the right place. Today, we'll unravel the mystery behind accounts and their role in bookkeeping. First off, accounts are the smallest unit and a fundamental building blocks of a company's financial recording system. They help to organize and keep track of every financial transaction that occurs within a business. Let's start by looking at the various types of accounts. Asset accounts are all about ownership. They include everything the business owns, such as cash on hand, money owed by customers, inventory, equipment, and real estate. On the other hand, liability accounts record what the business owes. These liabilities could be loans, money owed to suppliers, mortgages, and other debts. Equity accounts represent the owner's value in the business after liabilities are subtracted from assets. These accounts include initial capital, additional reserves, and retained earnings. Revenue or income accounts track all income the business receives from sales and services. And lastly, we have expense accounts. These accounts keep track of all money that goes out of the business to pay for operating costs such as rent, utilities, wages, and supplies. Now that we've covered the types of accounts, it's crucial to understand the underlying accounting principles. In the double entry system, each transaction affects at least two accounts, with a debit in one and a credit in another, keeping the accounting equation balanced. The accounting equation, assets equals liabilities plus equity, must always be in balance after every transaction. Debits increase asset or expense accounts and decrease liability, equity, or revenue accounts. Conversely, credits increase liability, equity, or revenue accounts, and decrease asset or expense accounts. The chart of accounts is a listing of all the accounts in the general ledger. It categorizes each account, often numerically, to organize financial data effectively. Every transaction must be recorded in a way that maintains the integrity of the financial records. This includes providing a clear description, date, and relevant amounts for debits and credits. The functioning of an account in bookkeeping and accounting involves several stages: the initial position, movements during the period, and the closing of the account. Initial position or opening balance. For balance sheet accounts, which include assets, liabilities, and equity accounts, the initial position is known as the opening balance. This represents the value at the beginning of a new accounting period and is carried forward from the closing balance of the previous period. These opening balances are essential as they provide the starting point for all transactions that will occur in the new period. Movements or transactions. Throughout the accounting period, each account will record movements, which are the transactions affecting that account. For example, when a company makes a sale, it will record a movement in its revenue account, an income statement account, and its cash or receivable account, an asset account on the balance sheet. Debits and credits are applied to the accounts, adhering to the double entry accounting system rules, ensuring that the accounting equation remains balanced. Final position or closing balance. At the end of the accounting period, balance sheet accounts will show a closing balance, which will become the next period's opening balance. For income statement accounts, which include revenue and expense accounts, the situation is different. These accounts are closed at the end of the year. This means that their balances are not carried forward to the next period. Instead, the net total of these accounts, revenues minus expenses, is transferred to the equity section of the balance sheet as net profit or net loss. This process effectively zeroes out the income statement accounts, so they can start fresh in the next period. This mechanism ensures that income statement accounts reflect the income and expenses of a single accounting period, helping to measure the financial performance of the business accurately during that time frame. In contrast, the balance sheet accounts provide a cumulative record of the company's financial position at a point in time, carrying forward the value of assets, liabilities, and equity from one period to the next. Accounts should be reconciled regularly to ensure that the entries on the bookkeeping system match those on bank statements and other financial documents. The data from various accounts are used to prepare key financial statements: the balance sheet, the income statement, and the statement of cash flows. And in today's digital age, bookkeeping often involves accounting software that can automate many of these processes, ensure accuracy, and provide real-time financial insights. In summary, understanding these fundamentals of accounts and bookkeeping is crucial for maintaining accurate and comprehensive financial records. It allows for informed decision-making, ensures regulatory compliance, and provides a clear view of the business's financial health. So, the next time you look at a company's accounts, you'll know exactly what you're looking at. That's it for today's lesson. We dove into the importance of accounts and bookkeeping, explored different types of accounts, discussed accounting principles, and got a handle on the mechanics of accounts. We also looked at reconciliation and financial statements, and touched upon modern bookkeeping. I hope you found this content useful, and it has given you a better understanding of the complex world of bookkeeping. Remember, keeping a clear and accurate record of your financial transactions is not just a legal requirement, but it's also a cornerstone to making sound business decisions. If this video has been helpful to you, or if you think it might be useful to someone else, don't hesitate to give it a like and share it. Your support means a lot, and it helps us continue to produce informative content like this. And if you're not already part of our learning community, hit that subscribe button. We regularly post videos on a wide range of topics, providing clear, concise, and approachable explanations that anyone can understand. Thank you for spending your time with us today, and remember, knowledge is power. Until our next video, keep learning and stay curious.